please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The SGX Nifty is indicating we'll have a weak start, and that's for good reason, because most of the other emerging markets in Asia are down quite a bit. That is one problem in trading the breakouts. If you did on Friday, of course, that the next day could be a bit of a gap down. Sudarshan Sukhani and Prakash Gaba are with us. Rajat Bose will also join us in a bit. Good morning, Sudarshan. So your thoughts, if the SGX Nifty is right, and there's a reason that it perhaps may not be, but if it's right, in that case, would that present a buying opportunity, or could today be a bit of a down day?
Yeah, good morning. Well, even on Friday, Anuj, what happened was that 100-point rally in the Nifty intraday still kept us inside a trading range. That range is well defined. 10,700 is support and 10,830, 840 is resistance. So we didn't actually cross that range, and this really happens because inside the trading range, markets move up and down, and that gives the sense of momentum. But in reality, we are not going anywhere. We are where we were. So today is expected to be a day when resistance should kick in. We would be bullish only if the Nifty closes above 10,850. It should close, not make an intraday excursion. Till then, I would assume that this is a sell on rally day, which towards 10,800 we are willing to take a short position. Now this trading range will break one way or the other at some point of time, and my own personal view seems to be that we will slide below 10,700, if not this month, perhaps next month.
Oh, wow. Okay, so heading for lower levels then, Sudarshan. So for today, I mean, what would your approach be? Would you look at shorting the Nifty itself? Because I remember last week you were saying that the Nifty Bank is perhaps not the best shorting candidate. That's relatively stronger.
Yes, the Nifty Bank is relatively stronger, but the Nifty itself is available for shorting around 10,800. Essentially, it means on a small intraday rally. We avoid the Nifty Bank. It's pretty confusing. There were big rallies earlier. It was slightly outperforming. So we don't touch it on a day when I expect the markets to be, say, sluggish and weak.
Rajat, good morning. As Sudarshan said, we have been oscillating in a well-defined range of 10,700 to 10,850. How would you trade it in the near term? And do you sense a breakout either on the upside or a breakdown?
See, first of all, I quite concur with Sudarshan that the Nifty needs to take out 10,850, 10,860 decisively. And for me, the decisive breakout would actually mean that you even conquer 10,887. Of course, for intraday traders above 10,850 or 10,860, wherever they feel comfortable and sense the intraday momentum, they can trade long. But for positional traders, I would suggest that at least 10,887, that is the earlier high, around say early June, there was a high of that level. Once that is taken out, you can take a positional trade with a stop below 10,835, the last close. On the other hand, if 10,820 were to be broken, then there could be a fall below 10,800, and once 10,780 is taken out, then it could even fall further. So here there is a possibility that buy weakness, sell strength could be a better strategy to take out. And on the other hand, Bank Nifty appears to be quite strong, and above 26,766, I think there could be a long trade, and that could actually take it to say another 200 points on the upside to something like 26,950 to about 26,990 kind of levels. So Bank Nifty, you can go long, but not so much in the Nifty as such.
Okay. Prakash, good morning. How are you approaching the major indices today?
Good morning, Anuj. I think last week we spoke about a level of 10,822. The market has closed just there, right like a dot. So far, the trend is still intact, but that's a strong resistance to deal with. But when I look at the chart, it tells me that there's a strong support on the Nifty at 10,787. As long as that holds, upside is on. Where can it go from here? Where can it go from here? Possible 10,900. And where do you buy? Perhaps we get dips. Those are buying opportunities. Now, if we get rallies, that I wouldn't say that those are buying opportunities. Wait for a dip to come, but buy closer to 10,787 and we can see an up move. When I look at the Bank Nifty, exactly same is the case. Very strong resistance on Bank Nifty, somewhere closer to 26,917. It can go there, and very strong support in the vicinity of 26,633. So we get dips on Bank Nifty. Those are buying opportunities. What we saw in the last 1 hour on Nifty and Bank Nifty was a massive up move. I think we need a rest here before it can go up.
Okay, fair enough. Sudarshan, let's get to the stock calls of the day. I see, despite your overall sort of cautious sentiment, there's still some buys that you're going with.
That's because the idea is that the Nifty continues to be in a trading range. So there will be strong stocks to buy and weak stocks to sell. We start with Cipla. Cipla is on the verge of a significant breakout. I have been very upbeat on pharma and suggesting that pharma is now bottoming out and starting its new bull market. So Cipla is a buying opportunity for the day. So is Kotak Bank. Kotak Bank is outperforming among the private sector banks, even though HDFC Bank went up on Friday. But the outperformance comes in Kotak. I think that it should have a good day today. And the third is Godrej Consumer. Again, an outperformer in the FMCG pack. We want to focus on sectors that are outperforming. In choppy markets, the stronger will become even better. So 3 buying ideas, 2 short sells, Engineers India and Cummins. Both have charts that seem that they are breaking support levels consistently. Both are in bear markets in a relatively benign environment. Both are intraday shorts.
Okay, and Rajat, your individual trading ideas for today?
I have 3 buy calls and 1 sell call. First, to start with Century Textiles. It's actually after having retested the bottom at lower levels, there was a minor bounce back, and I'm actually playing with that bounce back. The bottom was around say 890, and this today I'm actually putting a stop loss of 903.75, 909 it closed at. 915 and 925 are the 2 targets for Century Textiles. Second counter would be Asian Paints. Asian Paints, this is actually recovering from a low. After a fair bit of correction, this kind of a piercing line has been formed, and 1255 is my stop loss, and my targets would be 1279 and 1290. And finally, a mid-cap counter, that is Edelweiss. I would put a stop loss below 305. The chart looks good. Friday's performance had been pretty good. 317 and 320 are the 2 targets, closed at 310. And SRF is a downtrending stock. It made 52-week low, if I'm not mistaken, on the last trading session. And if not, then the low that was there at 1640 could well be tested today. That's my target, and I would put a stop loss at 1695. So 3 buys and 1 sell call from my side.
Okay, 3 buys and 1 sell. Prakash, what's on your list?
I have 4 buys. I'll go with Century Textile. Looks good to me. It's more of a bottoms-up approach here. Possible target on Century Textile on the upside is 935. Stop below 903 should be fine. I like CG Power again. Again, here bottoms-up approach, seen a good fall here. In the lower levels, signs that we saw was encouraging. Technical targets on the upside is in the vicinity of 59 zones, 60 zones. Stop below 54. India Bull Housing was looking good to me. Good momentum pull here. Possible target on India Bull Housing is around 1235, stop below 1190. And finally, Manappuram Finance looks good. Look again, a base formation out here. Possible target on the upside in the vicinity of 106, stop below 102.
Okay, so those are some ideas that our experts have to work with on Monday morning. Sudarshan, your thoughts on one of the strongest stocks in this consolidation patch, Reliance Industries, took a bit of a breather, a break on Friday. What would your view be on it?
Well, I'm very upbeat on Reliance as an investment idea. I think the targets from here onwards is about 1500. But for a short-term trade, it does appear that Reliance has come to an exhaustion point. I would not be a buyer.
All right, gentlemen, we'll touch base with you in just a bit. For now, it's time for a break. When we return, futures and option trades are lined up with BK Sharma of HDFC Securities. Also, Market Talk is lined up with Dipan Mehta and Mr. SP Tulsian of sptulsian.com. Welcome back. Last week, the markets consolidated. The mid-cap index lost nearly about 1%, so keep your eye on that. And this morning, in line with the rest of the region, the SGX Nifty is suggesting a negative start, so down close to about 0.5%. Let's get in a few more trading ideas, some futures and options trades with VK Sharma of HDFC Securities. Good morning, VK. How would you approach the Nifty and the Bank Nifty? A lot of the technical experts are saying that the Nifty may be still range-bound, but the Bank Nifty is showing promise on the upside.
Yes, definitely Bank Nifty looks better. It's much better placed. However, I'll rather pay attention to the finance stocks because I don't want to get into the banking space, because the Nifty appears to me, some individual stocks appear to me much more comfortable. So I'm looking at the financials among those. So I'm looking at ICICI Bank, where I'm suggesting to buy the 300 call at 4.6. Stop loss at 3 and a target of around 8. This is a stock which has seen 25% OI being built. The stock is up 5% in the series. So I think going with ICICI Bank is maybe much better than going with the Nifty Bank Nifty per se. Bajaj Finserv is another stock which we like because of the fact that it is a holding company of the insurance. And I'm buying the 6,200 call at around 70 rupees. Now, mind you, this stock had done pretty well. So it closed at 91. I'm buying that option at 70. That means if it dips, then only I'm a buyer here. I'll have a stop loss at 40 and a target of around 125 in Bajaj Finserv, 6,200 call.
You really like financials, Vinod, don't you? There's also HDFC. No, there is also M&M Finance, I believe, on your list. Another financial name, yeah.
Yes, that is another stock which is doing well. And although we didn't see anything happening per se, the stock has already lied down quite without any much activity. Only 1% OI added in the series, 2% up for the series per se. I'm buying the 500 call here at around 5. Yesterday it had closed around 7. So keeping in touch with the opening of the Nifty, I'll be willing buyer at 2 rupees dip from yesterday's 500 call at 5 instead of 7. Stop loss 3, target around 10 here. And my other two stocks are from the pharma space.
Okay, so you want to run us through your pharma trades?
Yeah, and pharma as well as there is another stock TV18, which of course is the company. So if your compliance doesn't allow, I'll leave that, but I can look at Biocon. I'm buying the 640 call at around 7.7, stop loss at 5, target of around 13. And Sun Pharma, which I have been saying in the last my 3 appearances here, that the pharma sector has bottomed out and investors are confidently buying this. So I am buying the 580 call at around 6. Yesterday it had closed around 7.5 on Friday. So should it dip, I'm a buyer here. Stop loss 3, target of around 11. So that completes my pharma cap back.
Okay, Vinod, we'll leave it on that note. Thanks very much for the call this morning. Let's focus on one stock. Tata Motors laid out a comprehensive plan for JLR at the company's Investor Day that took place on Friday. The company has given a medium-term guidance to grow faster than the premium car industry, and it has guided for EBIT margins in the range of 7 to 9%. It's initially 4 to 7% up till 2021, and after that, taking it up to 7 to 9%. Jay Kale of Elara Capital is now joining us on the line to give us his sense on how convincing this plan is sounding. Jay, thanks so much for taking the call today. Tata Motors, one of the dogs of the Nifty, stock at a 52-week low. Do you think the investor meet gave anything that could actually see a turnaround in the stock's fortunes?
Yeah, so I think the plans are pretty much laid out earlier in terms of margin guidance. The investor meet actually kind of elaborated on how they plan to achieve it. So significant amount of cost reduction measures were given during the meet in terms of reduction of labor and component costs, platform consolidation, low-cost Slovakia operations. So I think the plans are laid out, and I think now the confidence of them achieving the 4 to 7% margin guidance in the near term is higher, and of course 7 to 9% in the long term. So I think from these levels, I think most of the negatives have been priced in.
Okay, so the investor meet has reinforced your confidence that the company will be able to meet its margin guidance over the medium as well as long term. What about on their capex plan? One concern is that this heavy investment that they're talking about, £4.5 billion over FY19 to 21 annually, will hurt the company's cash flows, and that could put pressure on the stock. Your thoughts on it?
Yeah, so we had already factored in 4.5 billion for FY90. Now we have a little more clarity on FY20 and 21 as well in terms of the capex. It remains constant at GBP 4.5 billion. So things are only expected to improve from here in FY20 and 21 with once the margins improve from here with the cost reduction measures kind of getting reflected in the numbers. Yes, definitely there will be FCF negative in the near term, but I think that's all factored in most of the street's numbers.
What are the kind of volume estimates you're looking at for both the parts of the portfolio, Jaguar and Land Rover, in the coming months, Jay? Because it's all this, trade tariff talk. We've seen some of the marquee names out of Europe. These companies actually talking about the possibility of sales being hurt in a market like China. We just heard those statements from Daimler on Friday.
Yeah, so the global volume outlook continues to be volatile with various news flows coming in here and there in terms of the trade war news. But yes, currently we are factoring in a 7% volume CAGR for JLR over FY19 and 20. There will be variations in monthly numbers in terms of the volume growth, but I think with the new launch pipeline that they have and the E-Pace and the full year of Velar coming in this year, I think with the global situation being largely stable, expected to be stable, ex of the trade wars and things that can come in the future. As of now, as it stands, I think a 7% CAGR should be achievable.
Okay, stock is already down nearly 29% since the start of the year. Jay, one final word on your call on the stock, your target price from here on?
Yeah, so we had recently just last month upgraded. We were earlier reduced. Now we had last month upgraded stock from reduced to accumulate. I think the extreme pessimism has been built in the stock price, and we reiterate our accumulate rating now on that stock.
Okay. All right, Jay, we'll leave it on that note. Thanks for joining in. So they turned slightly optimistic on Tata Motors. On that note, let's welcome in Deepan Mehta, member of both the exchanges, joining us into the conversation this Monday morning. Good morning, Deepan. Actually, let me make that first question to you because it's an open debate on Tata Motors right now. The value pickers will want to pick the bottom and hope for a turnaround. And then there are the naysayers who cite a lot of issues, including headwinds to this margin guidance, the optimistic guidance of 4 to 7% and then 7 to 9% a couple of years down the line.
Yeah, I know. I think that, the stock has corrected so much that does attract some amount of value buyers, and also the investors, who feel they can have a contrarian play in Tata Motors. But certainly I am not convinced. I think the fact that the company is investing such humongous amounts does show that there are perhaps challenges going forward in terms of actually maintaining the growth and keeping its market shares intact. And we have seen that JLR per se is a complex company with a lot of volatility in earnings as well as volatility in profit margins. So given the whole picture, I think that it's best to completely avoid Tata Motors from an investment perspective. I think the products are great, but per se the stock price I don't think will deliver over the next few quarters or so. And maybe every rally which takes place on account of any news flow or even one positive quarterly number should be used as an exit opportunity.
Okay, exit Tata Motors at any rally. What about IDBI Bank? Stock is already down 30% from levels of nearly 85 that it hit in March. LIC could make an entry. Your thoughts on it and any trade on IDBI Bank?
I think it's basically a trading stock. One cannot make an investment case for investing in IDBI Bank given the kind of NPAs and the balance sheet quality. But as and when I think it makes progress on improving its operations and cleaning up its balance sheet, you may see again punters or even speculators coming into the stock, buying into it as a trading opportunity. But from a long-term investment perspective, I think IDBI Bank is still completely avoidable. There's no roadmap as to how it's going to actually turn around and clean up the mess which is there over there. So from a long-term investment perspective, I think there are better options in private sector banks. It could be HDFC or IndusInd, Yes Bank, Kotak. I think there are many choices as far as private sector banks are concerned. And these are the banks which are secular performers, have been gaining market share and have kept the balance sheet relatively clean. So my preference would be for those private sector banks than IDBI Bank. But as I said, I think, depending upon news flow, and it could be a lot of news flow in IDBI Bank, one could have a trading opportunity in it, but certainly not an investment case for IDBI Bank.
Okay, let's actually take this story forward before we discuss other stocks. What is going to be the fate of IDBI Bank from here on? That's the big story. The possibility of LIC actually buying out the government's stake in the bank. Sandeep Parekh, founder of FinSec Law Advisors, now joins us on the line. Sandeep, good morning. Good Monday to you. So there are lots of unanswered questions right now, and we're also grappling with different sides to the story. But from a legal standpoint, which are the regulations that, if at all, could come in the way of this? I mean, our colleagues from Delhi tell us that right now discussions are still on with the insurance regulator to get a waiver, for instance, the 10% holding requirement, etc. So legally, what all are the hurdles that the government will have to cross to get this done?
So I think one would obviously be IRD, as you mentioned, the 10% cap per company, which is a prudential cap. So they'll have to ask IRDA to give them a time period within which to comply. And at least from what I saw in the papers, that there have been precedents about that. The second issue is actually more to do with, I think, fiduciary duty of the insurance company itself, which is LIC. Is it right for them, even if it's legal, is it right for them to actually purchase these shares, which are probably quite worthless today?
So do you expect the RBI to give its approval, given that it could put the policyholders at risk? Because in the past as well, the RBI has raised concern about LIC perhaps being given a bank license, given its other investments in the banking stocks, and like State Bank of India and Bank of Baroda, the interconnectedness in various bank stock holdings. So do you expect RBI approval to come through?
See, this theoretical conflict issue is not very large, practically speaking, because ultimately it's LIC is holding stakes in pretty much every listed company in India. So whether it's private sector or public sector, they would be in the same industry almost certainly. So I think I'm not too worried about that, because they are indeed a passive shareholder. We've noticed very, very rarely, once in a couple of times in a decade at most, we've seen them taking a stand at all, leave alone an activist stand.
Sandeep, but the point that you raised about the fiduciary duty and responsibility, I mean, I don't know legally if there are any caps or limits to what an insurance company may do with all the policyholder money that it's picking up. I mean, LIC has used that money to make all kinds of investments in the past several decades. Any view on this?
Yeah, so exactly the biggest problem in this whole deal is that essentially LIC policyholders and investors in ULIPs, etc., will be basically be palmed off this company. The question, of course, the biggest question is at what price? Because at 30% plus NPAs, I doubt there is much value attached to the company shares at all, unless the real estate is grossly undervalued and there is some value to be unlocked there. But otherwise, it's going to be, the amount of value which is available, which is typically 5 to 7% is capital, would get entirely wiped out by the NPA.
All right, Sandeep, thank you very much for your thoughts today. So the big concern is, will LIC fail in its fiduciary duty to the policyholders if they take up the IDBI Bank with 30% plus gross NPAs? So that's going to be a big concern. And of course, the price at which LIC will pick up this particular stake. Let's continue our conversation on individual stocks. Back again with Dipan Mehta. Dipan, Reliance Industries was a big drag in Friday's trade. It was down close to about 2% odd. Your thoughts on the stock from here on?
So I think you'll have a very decent near-term profit growth as far as Reliance is concerned, as more and more of its projects go on stream. but that's largely discounted, and if you compare it with other global peers, I think in terms of valuation it is pretty much on the higher side. And Reliance Jio, which was supposed to be, you know, a major game changer for the company, I think a lot of uncertainty surrounds that particular investment, especially its return on capital employed and overall you know, profitability of the enterprise. And the other businesses which are profitable, be it retail, etc., still have to gain traction to make a difference to the profit numbers of the company, given its very large base effect. So no doubt, I think it's a great company and you know, fantastic products and build huge global size businesses. But then, you know, from an investment perspective, I don't think Reliance Industries can outperform going forward. I think there are better choices elsewhere, and other sectors, could be banking, could be consumer oriented stocks, or even select exporters, rather than Reliance at this point of time.
Okay, and reports suggest that HDFC as well as Kotak Mahindra Bank may be competing for a controlling stake in PNB Housing Finance. Do you look at PNB Housing Finance?
Yeah, I do, and you know, it would be great if they're able to strike a deal for PNB Housing Finance. The similar situation, I think, Canfin Homes were not able to strike a deal and still remains as a subsidiary company of Canara Bank. But the thing about acquiring PNB Housing Finance is that the housing company has very close links with PNB. A lot of business gets driven from there, and a lot of employees have been deputed from PNB, and the brand also is revolving around the Punjab National Bank brand. And you know, one has to see how acquisition of such a company will actually have large synergies as far as existing housing companies or banks are concerned, and how they will actually amalgamate it and get the kind of, you know, synergies going and actually grow the business. So all also depends upon the valuation per se, and given that Canfin Homes were not able to get a good value, I doubt whether PNB Housing Finance will also be able to fetch a good value for PNB and minority shareholders accordingly. So I think let's just wait for the news flow over here, but I'm not that optimistic from minority shareholder point of view as far as PNB Housing is concerned, given that you know, a lot of business gets driven by PNB, and although we would welcome maybe new owners, but they would have difficulty in terms of growing the loan book and kind of, you know, the revenues going, and still maintain good asset quality.
Deepan, a word on ICICI Bank as well. This fresh news that's come in, third whistleblower, could it kind of put a speed breaker on the revival or the renewal rally that we were seeing on the stock?
Yeah, it certainly could. I think, you know, it's a very fluid situation as far as ICICI Bank is concerned. Lots of news flow and lots of question marks as far as the operations of the bank are concerned. And from time to time, as and when news flow does take place, there are trading rallies and there are sell-offs as well. But look at it from an investment perspective, I think it's a bank which has underperformed over the past several years or so. They have not been able to grow the balance sheet, the net interest income, and some of the other qualitative and quantitative parameters as you compare it with some of the other peer banks, the private sector banks. And the balance sheet still remains pretty much filled with a lot of NPAs. So given this scenario, you will certainly have trading rallies in ICICI Bank, one good quarter, some positive news as far as top management is concerned. But from a 2-3 year type of a time frame, I don't think ICICI Bank will be able to outperform its peer groups, say an HDFC or an IndusInd or even a Kotak Bank. From that point of view, I think from an investment perspective, I'd still like to avoid ICICI Bank, but I think it provides great trading opportunities depending upon the news flow, and it will always remain in the limelight. And from that point of view, I think you could have certain opportunities over there, but from a long-term investment perspective, still would like to avoid ICICI Bank.
All right, Deepan, stay on. Need to slip into a very short break. SGX Nifty still down close to about 50 points. When we return, pre-opening rates.